Good afternoon, Stéphane. We are here at Eleva Capital. Could you say something about your outlook for this investment year?
Hello. So we had a year which was very, very good in the market, especially in the US last year. It was the second in a row. So it's very fashionable right now to move the money into the US out of Europe. We are much more balanced at Eleva for a very simple reason is pricing is very high in the US. So very clearly growth is still good. There are some opportunity in the US, but again, with two very good years in the stock market, now the stock market is very expensive and is priced for perfection. If you look at the result season, for instance, when a company publish good result, they don't go up much because the market already expect that. But when they publish bad result, they really get penalized very, very heavily by the market. So we're sure there are opportunity in the US. That's one point you have to look at, but you have to be very careful and very choosy in terms of where you invest. In Europe is exactly the opposite. Valuation are low. So Europe always has a discount to the US, but the current discount is the highest ever. So Europe is really, really cheap compared to the US. And fair enough, there are a lot of problems in Europe in terms of growth, political issues, etc. We know that, but everything has a price. And to be frank, some of the company in Europe trade at what we would regard now as unreasonably big discount. And so we think there are opportunity. So you should not run away from Europe.
Would you then, in general, advise investors to sell some of their US positions and invest in Europe?
Yeah, probably that's what we're doing. Eleva is known for for managing essentially European portfolio. I'm actually managing a global portfolio, and we made a lot of money in the US last year. We again have a more balanced approach right now. We tend to look at secure investment in the US. Once again, you cannot make a mistake in the US because prices are so high that when you make a mistake, you suffer a lot. And in Europe, we are kind of bottom fishing, looking for some value stock that have good potential. We call them the stable growers. So you have companies that are still in good sector, that have good opportunity, that are still delivering value for shareholders. And again, they're trading at a price which is, from our point of view, too low.
Would you maybe then advise investors to take more risks this year?
Yeah, probably. So again, at Eleva, we have one specific tool, which we call the Eleva Capital Index. It has been designed by Eric, the founder of the firm, about a decade ago, and is a signal in terms of whether you should take risk or not. The Eleva Capital Index for Europe right now is above the average, slightly, and it's slightly improving. So again, it's far from being euphoric or far from being very, very optimistic, but is moving on the right direction. And when I joined the company, we developed a global Eleva Capital Index. The good news with that, actually there are two good news. The first good news is much higher because the US are doing good. And the second good news is usually the global leading indicator moves before the European one. So that suggests that the European Eleva Capital Index should continue to improve slowly in the near future. So once again, it's probably a good time to move back, being careful into Europe.
Okay. If you say the European markets are in general cheaper or much cheaper than US, would you then maybe advise European investors to buy an index product?
Well, there is one point which is very interesting is if you look at the correlation between all the stock in Europe, it's close to all-time low. So it means that every company move in a different direction in a sense. That's typically what you find for a stock picker market. If the correlation was very high, everybody would move up or down at the same time. So that's a good time to buy an index. I think there's a lot of value in the kind of environment we have right now, where all the companies diverge. There's a lot of value in terms of stock picking. So buying an ETF or buying an index is probably a good idea. But I think you would leave a lot of value on the table, and it's probably much better to go into active management at this point of time.
Okay, thanks for the interview.
Thank you very much.